If history repeats, then the crypto bull market will end in the next few months, and the crypto bear market will begin sometime in 2026. The recent market wipeout caused by Donald Trump's re-escalation of the trade war with China and the subsequent record crypto liquidations may have accelerated this timeline. That said though, when exactly the bear market begins is up for debate, but being prepared for it is key to surviving. So, how can you best prepare for the next bear market? How will you know when it's started? How will you know when it's over? And could it be different from previous bear markets?
This could be something completely different.
Today, we're going to answer all those questions and more. My name is Guy, and you're watching The Coin Bureau. First though, nothing in this video is financial advice. It's educational content to inform you about crypto bear markets. And if you appreciate this kind of content, smash that like button and let us know in the comments when you think the next bear market will come. Now, let's start with a bit of context. As most of you will know, crypto follows a 4-year cycle, wherein the 4th year is the most bullish, meaning it contains all-time highs for Bitcoin and most altcoins. Assuming history is repeating and the 4-year cycle is still intact, then we are in that 4th year. It may not feel like that if you hold altcoins, but remember that most altcoin gains come at the very end, and they come very fast. So if we are in the 4th year of the 4-year cycle, which seems likely, then what comes next is the 1st year of the next cycle, which is the most bearish, meaning it contains the cycle lows for Bitcoin and most altcoins. FYI, Bitcoin has historically bottomed around 1 year after its previous 4-year cycle top. So be sure to keep that in mind when it becomes clear that the Bitcoin top is in. On that note, another thing to keep in mind is that cycle lows for Bitcoin typically correspond to some bearish catalyst that makes you feel like it's all over for crypto. This usually involves a deleveraging event wherein a large crypto project or company that took on lots of debt during the bull market is finally liquidated, resulting in a forced sale of Bitcoin and other cryptos that causes one final flush lower. The obvious example here is the FTX exchange, which collapsed in November 2021. Bitcoin and most altcoins bottomed a few weeks later. But of course, it's easy to forget that history doesn't repeat, it rhymes. So, next time, it probably won't be a crypto exchange. It could be a different entity, like a poorly managed Bitcoin treasury company going under and selling BTC. But let's back up a bit. The crypto bear market is still months away, so how exactly can you prepare for it now? Well, for starters, you can avoid doing the thing that will cause most individuals and institutions to get wrecked during the bear market, and that's to take on too much leverage. In plain English, you want to minimize the amount of money that you've borrowed inside and outside of crypto as soon as possible. This is simply because when the crypto market starts falling, any crypto collateral you're using could be liquidated, leaving you with nothing or less if you're borrowing uncollateralized using cards and banks. More importantly, chances are that the catalyst which kickstarts the next crypto bear market will be bad for the overall economy. And this means that you could be in a situation where you're strapped for cash whilst also wrecked. And the risk of this seems to be especially high this time around, because even though some economies, like the US's, are technically looking fine at a high level, the situation on the ground seems to be a bit different. Many people are reportedly struggling to find jobs, and though many claim that this is because of AI, it could just be because most people were working so-called bullshit jobs that didn't need to exist anyways. And you can learn more about that rabbit hole down in the description. So this is a kind of long-winded way of saying that you want to reduce and ideally eliminate as much debt as you can before the crypto bull market is over, and ideally have some savings in case the economy turns sour in 2026. That way, you won't get liquidated on the way down, and you'll actually have some cash on hand to accumulate crypto during the bear market, especially at its lows when times are toughest. Now, the second way to prepare for the crypto bear market is to set realistic expectations for how low crypto prices could go, how long the bear market will last, and how long the recovery will take. For reference, it's common for Bitcoin to fall by 70 to 80% from cycle highs to bear market lows, and it's likely that most altcoins will fall by much more, like literally 90 to 99% plus. Before you drop a comment about how this time is different and Bitcoin won't fall as much because of institutional adoption or whatever, here are two sobering things to consider. The first is that most spot Bitcoin ETFs are currently held by retail investors, and most of the money Bitcoin treasury companies have been using to buy BTC appears to have come from other large players in the crypto market. The second thing to consider is that it's not the buyers that matter on the way down, it's the sellers. In case you forgot, crypto bear market bottoms are usually caused by a deleveraging event where some crypto project or company is finally liquidated and forced to sell its holdings. Newsflash, but crypto bear markets tend to start in the same way, some catalyst that causes a load of liquidations. And when these liquidations start, they're extremely hard to stop, particularly when they're starting from all-time highs in the market. Given how much leverage has been built up by that point, it's likely that anyone who tries to catch that falling knife will get their hands cut off, and it's guaranteed that any large investors looking to accumulate crypto know this. They will wait until later to start buying. And speaking of which, this fits hand in glove with how long the crypto bear market will last. Once again, it's worth remembering what happened in previous crypto bear markets. First, something happened that caused a wave of long liquidations that overpowered any buyers stepping in to buy the dip. Eventually, something happened that caused the final liquidation that translated to the cycle lows. And then came the public outrage. Governments, central banks, regulators, even key players in crypto. They would all come out after the fact to ask what went wrong, as if excessive leverage wasn't the culprit every single time. Now, logically, this doesn't exactly encourage people to step in and buy the dip. On the contrary, it tends to be a huge turnoff to investors, mostly large investors who care about compliance. And that, ladies and gentlemen, is why it takes so long for the crypto market to recover after it bottoms. Large investors want nothing to do with crypto, most small investors are too scared to buy the dip, and the few that do have the courage to do so tend to be strapped for cash due to not properly managing their portfolio in the months leading up to the bear market. So be sure to re-watch the first part of this video. Now, this begs the question of how long it will take for the crypto market to recover once it bottoms. The answer ultimately depends on the crypto in question. If there's anything we've learned from Ben Cowen this cycle, it's that altcoins are the last to recover and rally. Bitcoin is always the first to recover, followed by large cap altcoins and eventually medium and small cap altcoins, and this can take years. But you'll recall that altcoins see their largest gains in the final phase of the crypto bull market, and that we appear to be entering this final phase. And if you want to maximize your altcoin gains, then you need to trade on a top-tier exchange. How does $50,000 in sign-up bonuses sound? Or how about a new iPhone giveaway? Well, we have an amazing competition right now with BitGet, a top-tier global exchange with all the features and coin support you need. If you sign up and create an account right now using this QR code or hitting the link in the description, not only will you be able to take advantage of that bonus, but you'll also be entered into a competition to win a brand new iPhone. The winner will be announced on one of our Monday live streams. So sign up right now while this competition is still on, because it won't be around for long. Anyhow, this relates to the third way to prepare for the crypto bear market, and that's to remember what we just learned. It takes years for the crypto market to recover. The recovery starts with Bitcoin, while altcoins can struggle to recover right up until the final phase of the 4-year cycle. Now, this is the one thing that's been different about this cycle, but we'll come back to all of that later. This raises a bigger question, though, and that's what you should do when the crypto market starts to recover. I'll start by repeating that nothing in this video is financial advice. It's just telling you how things worked in previous crypto bear markets. That said, the answer is to stick mostly with Bitcoin until Bitcoin dominance shows clear signs of falling on longer-term timeframes. That's yet another hard lesson many have learned this cycle, and it's yet another lesson that would have been easier to learn by looking at past cycles. Historically speaking, Bitcoin dominance bottoms close to the bear market lows and starts rising after that, which makes sense. That final flush is what destroys the liquidity pipe to the crypto market, with only Bitcoin slowly getting drops as the pipe is fixed. It takes a long time for that liquidity pipe to get fixed because it involves putting bad actors in prison, introducing new regulations, letting old crypto projects and companies die, and all that other stuff we discussed. You know, the stuff that keeps large investors out of crypto after bear market lows. And how can you tell when the liquidity pipe is finally starting to get filled? Again, look at Bitcoin dominance. When you start to see Bitcoin dominance showing signs of weakness on longer-term timeframes like the weekly and monthly, that means the liquidity pipe is closer to being fixed, and more liquidity is starting to find its way into altcoins. But again, this liquidity pipe isn't fixed until we enter the final year of the crypto cycle. And even then, the liquidity doesn't start flowing in size into altcoins until the very end. And how can you tell when the liquidity pipe is finally starting to get filled? Again, look at Bitcoin dominance. If you can see that Bitcoin dominance is starting to enter a long-term downtrend on the monthly chart, then that's confirmation that liquidity is finally starting to flow beyond Bitcoin and into altcoins. But again, this liquidity flows into the larger altcoins first. Smaller altcoins only get liquidity at the end. Still, this doesn't change the fact that when Bitcoin dominance starts falling on longer-term timeframes, it's time to start rotating out of Bitcoin and into altcoins, primarily large caps. And in case you're wondering, yes, Bitcoin dominance has been falling on the monthly since July. This suggests that it's likely to continue heading lower in the coming months, with a few big bounces along the way. The hard part is figuring out exactly where Bitcoin dominance will bottom, and that happens to be the most critical part because a bottom in Bitcoin dominance often corresponds to the top for most altcoins. Historically, Bitcoin dominance bottomed somewhere in the 40 to 45% range, but there is one big caveat here, and that's that Bitcoin dominance is warped by various factors like new token unlocks. What this means is that Bitcoin dominance could bottom at significantly higher or lower levels compared to previous cycles. But as far as this cycle is concerned, it's prudent to remember that this time isn't different. This means that Bitcoin dominance will fall somewhere down to the 40 to 45% range. It's anyone's guess when exactly that will happen. All that we know is that it's likely to be the top for altcoins. And this brings me to the biggest question of all, and that's whether the next crypto bear market will be different from the previous ones. The answer here fundamentally depends on whether the structure of the crypto market has changed enough in this cycle for the next cycle to be different. Some would argue that the structure of the crypto market has changed, whereas others would argue that it hasn't. Arguments in favor include the launch of spot crypto ETFs, not just for Bitcoin, but also for altcoins like Ethereum and Solana. There have also been a whole slew of pro-crypto regulations passed in the US and elsewhere, which have permanently changed the structure of crypto's pipes, so to speak. The ease at which on-chain markets have become more accessible is probably the most substantial change there. Now, arguments against include the fact that even though crypto's market structure has changed, it's the same liquidity flowing through the pipes. It's a small, select group of institutions plus crypto companies and a load of retail investors who are essentially gambling to get ahead. Most importantly, though, we're seeing the exact same dynamics of leverage rapidly building up, like pressure building in the pipes. Now, at first glance, you might think that these perspectives are at odds. Upon closer inspection, however, you realize that both arguments are valid at their core. Yes, the structure of the crypto market has changed, but yes, it is still the same liquids putting pressure on the pipes. This means that the pipes will probably burst again, but the repair could be faster, and the liquidity could start flowing faster too. In plain English, the crypto market structure could, keyword could, have changed enough this cycle that the next crypto bear market may not be as long, But the fact that we're seeing record levels of leverage building up means the drawdown could be just as deep as previous cycles. So put these two together and you have a crypto bear market that looks more like a V-shaped recovery. Now, to be clear, this won't mean that crypto would be back to new all-time highs within a few weeks. It would still take months for Bitcoin to fall and for everything to find a bottom. But it's the recovery part that could be faster. Come to think of it, that would mostly depend on how well over-leveraged entities can hang on during the bear market and whether there could be any crypto bailouts from bigger players. To refresh your memory, large crypto projects and companies initially offered bailouts to smaller projects and companies during the 2022 bear market. In retrospect, they didn't do much to stop the crash, but they did help ensure that many crypto projects and companies survived to see another cycle. It's also worth highlighting that cooperative survival instinct in crypto when times get seriously tough. Not only that, but it's worth underscoring too the fact that the crypto giants that survived the previous cycle have since become behemoths. Take Tether, for instance. There were genuine concerns that USDT would depeg when USDC depegged in early 2023, and even bigger concerns that regulators would go after Tether when they went after Binance later that year. But Tether survived, and now it's bigger than ever. To put things into perspective, Tether made a $13 billion profit in 2024. Not revenue, profit. That is a staggering number, and it's a massive war chest that could be used to protect the crypto industry during a bear market. The catch is that Tether's protective actions could focus on companies and projects affiliated with Bitcoin rather than altcoins, more so since Tether has begun launching its own Layer 1s, and you can learn more about them in the description. Now, if we're correct that Tether could step in to rescue Bitcoin-related companies and projects, this means that Bitcoin may not fall as much as in previous cycles, just because the entities which would normally be forced to liquidate BTC could get a bailout from Tether. It goes without saying, though, that most altcoins would be absolutely decimated in this scenario, but many do have years of runway saved up. This means that the next crypto cycle could be marked by greater Bitcoin dominance relative to altcoins, but also a cycle where the Bitcoin dominance measure could still fall, just because we're likely to see other sectors like stablecoins and tokenized RWAs grow their market share. Now, it's fun to think about these scenarios, but just remember, this time is not different until it is. So don't get too excited or too upset. But remember, those who are prepared for what comes next will end up being the biggest winners. And if you made it this far and want to learn more about how crypto ebbs and flows, then be sure to check out our video about how the crypto market works using the link in the top right. Thanks as always for watching, and I'll see you again soon. This is Guy, over and out.